Hello, everyone. Welcome to a new episode of News Interpretation of Blockchain. In today's program, we will continue to bring you the latest, hottest, and most valuable news from the crypto world. From macro policies affecting the market to the latest trends of mainstream currencies and in-depth analysis of industry hotspots, we strive to help you grasp the most comprehensive market pulse in the shortest possible time. Now, let's take a look at today's headlines. First, let's focus on two major news stories from the U.S. market. The U.S. Securities and Exchange Commission, SEC, recently updated its staff guidance, making significant adjustments to the accounting rules for USD stablecoins. The new guidance clarifies that stablecoins with guaranteed redemption mechanisms can now be classified as cash equivalents. This policy is seen as a crucial step in SEC Chair Paul Atkins's push to ease restrictive policies and modernize crypto regulation. Previously, the SEC had clarified in April that certain covered USD stablecoins were not securities and did not require issuer registration. This initiative is considered part of Project Crypto, a broader effort to bring U.S. financial markets on-chain. Following this, major news also came from President Trump, who is reportedly preparing to sign an executive order to penalize financial institutions that engage in debanking crypto firms. The order aims to address a persistent issue in the crypto industry, where U.S. correspondent banks have often refused to process transactions related to digital assets for political reasons. This executive order could impose monetary penalties and other forms of discipline on banks that discriminate against crypto. These measures indicate that the Trump administration is committed to positioning the U.S. as a leader in the global digital asset market and providing a clear regulatory framework for the crypto industry. Next, we turn to the latest movements in mainstream cryptocurrencies and market hotspots. After setting a new all-time high of over $123,000 in mid-July, Bitcoin is now in a technical correction phase. Its price has fallen by nearly 4% over the past week, currently trading around $113,000. Despite this short-term weakness, crypto quant analyst Oinonen views this as a technical correction and predicts that if historical patterns hold, Bitcoin could rally back to its previous peak and potentially move toward $200,000 in the fourth quarter. On-chain data also shows that the Bitcoin Coinbase Premium Index has been negative since June 30th, indicating weaker buying pressure from US-based investors. Analyst BQYouTube points out that historically, stronger Bitcoin rallies have coincided with a positive Coinbase Premium, suggesting traders might want to wait for signs of renewed spot demand before expecting a sustainable uptrend. Ethereum's price has been consolidating sideways over the past 5 days, currently trading around $3,600, a drop of more than 4% from last week. While Ethereum briefly surpassed the $3,700 resistance level, it faced selling pressure near the $3,750 mark. Technical indicators suggest potential downside risk, with the ETH/USD hourly MCD gaining bearish momentum and the RSI below the 50 zone. Analysts suggest that if Ethereum fails to clear the $3,620 resistance, it could face further declines toward support levels at $3,550 and $3,510. XRP's price fell by 4.2% in a high-volume trading session, dropping from $3.06 to $2.93. A resistance level was established at $3.04, with $2.93 becoming the local support floor. This sell-off was accompanied by a volume surge of 169.41 million, which was more than 3 times its 24-hour average. Analysts believe that unless the price can reclaim the $3 psychological level with strong volume, the downside risk will continue. Dogecoin, Doge, shed 5% in a 24-hour period, with its trading volume quadrupling the daily average, causing its price to break down below the key support zone of $0.205. This decline is linked to institutional outflows from crypto-linked ETFs and broader market risk aversion driven by geopolitical tensions. Traders are now monitoring whether Doge can stabilize above $0.198 or face further downside towards $0.185. The Layer 2 network base experienced a 33-minute outage this week because a backup sequencer was not properly set up to process transactions. Although the downtime was brief, the incident highlighted Base's reliance on centralized sequencers, which can create a single point of failure when handling transactions at scale. However, some crypto pundits viewed the outage as bullish, arguing that people only make a fuss about downtime for chains with actual users. The head of engineering for Base stated that the team takes uptime seriously and is working to harden its systems to prevent similar incidents in the future. This was the second major outage for Base since its public launch last September. In the memecoin space, Solana is facing a strong challenge from Base. The number of new tokens launched on Base recently surpassed that of Solana. Simultaneously, the launch of the Coinbase-incubated Layer 2 project, B5e, is accelerating its progress in decentralized social media and tokenization, which further intensifies this rivalry. An analyst has pointed out that a spike in the number of altcoin deposits on the Binance exchange might act as a leading indicator for a market correction. Data shows that as the largest exchange by trading volume, spikes in Binance inflows have frequently preceded downward price movements or market corrections. This suggests that investors are moving assets to the exchange in preparation for selling during periods of market instability. It's notable that during the recent market drawdown, only Binance saw a significant spike in inflows. CryptoQuant has also shared two new indicators for tracking smart money movements. One is the average order size, which distinguishes between normal and big whale orders in futures trading. The other is retail activity through trading frequency, which identifies periods of overheated activity from small-scale traders. Data on Gala shows that peaks in retail interest coincided with price highs, serving as a reminder that excessive market euphoria can often be a precursor to a price pullback. Despite the overall market's soft performance, institutional capital continues to flow in. The state of Michigan retirement system has significantly increased its exposure to Bitcoin via the ARK-21 shares, ARK-B ETF. Its holdings have nearly tripled from 110,000 shares last year to 300,000 shares by the end of the second quarter, valued at approximately $10.737 million. This move underscores the growing confidence of institutional investors in digital assets. Similarly, the State of Wisconsin Investment Board disclosed a $321 million Bitcoin exposure through BlackRock's iShares Bitcoin Trust, IBAT, and Grayscale's Bitcoin Trust, GBTC. This confirms that Bitcoin ETFs are a crucial entry point for institutions, driving steady capital inflows. Next, we'll cover the latest updates from institutions and projects. Japanese financial giant SBI Holdings has filed applications for two new cryptocurrency ETFs, one focused on XRP and Bitcoin, and another combining gold with cryptocurrencies. This is considered a significant milestone in XRP's journey toward institutional recognition and regulatory acceptance in Japan. The ETFs are designed to offer a balanced investment product to Japanese investors, appealing to those who seek the growth potential of cryptocurrencies while mitigating risk with the stability of gold. DAX, a Korean crypto custodian, has started offering institutional custody support for XRP. This is the first concrete outcome of its partnership with Ripple, established in February, and is aimed at providing regulated access to XRP for institutional investors in South Korea. This move is seen as aligning with the roadmap of South Korea's Financial Services Commission to expand institutional participation in the digital asset market. San Francisco-based fintech company Slash has launched a new USD stablecoin, issued by Stripe's Bridge. The product is designed to help businesses with cross-border payments by removing the need for a U.S. bank account and reducing settlement times and foreign exchange fees. This launch comes at a time when stablecoin adoption is accelerating, especially after the U.S. president signed the Genius Act into law to regulate stablecoin issuers. Blockchain fintech company Figure Technology Solutions has confidentially filed for an initial public offering, IPO, with the SEC. The company offers services like lending and real-world asset, RWA, tokenization through its Provenance blockchain. This move places Figure among a growing list of crypto-related companies seeking to enter traditional financial markets to gain new funding avenues and attract conventional investors. Binance co-founder and former CEO Changpeng Zhao (CZ) has asked a U.S. bankruptcy court to dismiss a lawsuit filed by FTX's bankruptcy estate seeking to recover $1.76 billion. In the filing, CZ's legal team argued that his residency in the UAE places him outside of Delaware's legal jurisdiction. They also claimed that the U.S. statutes cited in the case lack extraterritorial reach to govern cross-border transactions. The case is centered on efforts by the FTX Trust to recover funds they claim were improperly moved by convicted crypto mogul Sam Bankman-Fried. Cardano ADA has achieved a significant milestone with the successful completion of its first-ever on-chain governance vote, which is being celebrated by the community as a historical moment. This successful event marks a solid step forward for Cardano on its path toward decentralized governance, increasing community participation in the network's future development. This move could attract more investors and developers who are keen on project governance. China's Ministry of State Security has issued a new warning, highlighting national security risks posed by foreign companies collecting iris data in exchange for cryptocurrency rewards. This appears to be a veiled reference to the WorldCoin project, co-founded by OpenAI CEO Sam Altman, which has previously faced regulatory scrutiny in Germany, France, and Kenya. The warning points to potential privacy violations and national security threats from transferring biometric data abroad and suggests that stolen facial data could be used by foreign intelligence services for deepfake identities. Indonesia is exploring the possibility of using Bitcoin as a national reserve asset. The local community group, Bitcoin Indonesia, met with the Vice President's office to discuss strategies for leveraging Bitcoin mining to boost economic growth and the importance of implementing Bitcoin education initiatives. This is considered a bold idea, especially given that Indonesia recently increased its taxes on crypto trading and mining activities. Thank you for tuning into this episode of News Interpretation of Blockchain. We'll see you next time.